This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at key events for investors and traders. Chip makers have led the market all year, but they could be losing their edge as investors position for new conditions into year-end. The Philadelphia Semiconductor Index dominated price action in the first half and remained the top performer through the end of the third quarter. But last week, it faltered on bearish news from a key supplier, and money shifted to new areas like precious metals, airlines, and banks. Chips could even be on the verge of relinquishing their leading position to gold miners on a year-to-date basis, according to TradeStation data. All told, the S&P 500 rose 0.9% between Friday, October 11th and Friday, October 18th. It was the sixth straight positive week and the fifth consecutive week of closing at a new record high. The index is now 36 points away from 5,900, having advanced 1,587 points in the last year. The sell-off in chip stocks came after Holland-based ASML pre-announced weak bookings. Coming from the world's biggest supplier of semiconductor equipment, the news potentially suggested the industry's boom is slowing. It also dragged on American peers like Applied Materials, Lam Research, and KLA. Precious metals and their producers, on the other hand, surged. Gold hit a record high above $2,700 per ounce. Silver reached a 12-year high above 33 after clearing a resistance level from May. Easy money policies and geopolitical uncertainty seemed to explain the moves. The European Central Bank lowered interest rates by 25 basis points last week, and Reuters reported a 50 basis point cut may follow in December. Slowing growth in China also spurred hopes of more stimulus. John Gray is the chief operating officer of Blackstone. It's the world's biggest private equity firm with a wide range of investments in companies and real estate. He told CNBC on Thursday that he sees inflation broadly cooling around the world. Gray detailed slowing wage growth and rents, adding that the cooler price data gives the Fed air cover to lower interest rates. In another potentially good sign for inflation, crude oil fell 8%. Energy is now the only major sector with a year-to-date gain in the single digits. Retail sales beat estimates for the fourth straight month, further dispelling worries about a slowdown that pushed the Atlanta Federal Reserve's estimate of third-quarter economic growth to 3.4%, up from just 2% at the beginning of September. Some investors may view that combination of moderating inflation and healthy growth as favorable for risk appetite. They may also ask whether the strong economy will boost corporate profits above current consensus. United Airlines beat estimates for earnings, revenue, and guidance as margins improved. It also announced its first share buyback since the pandemic. The results lifted peers like American Airlines and Delta Airlines, making airlines the strongest group last week after gold and silver miners. Walgreens Boots had its biggest weekly gain since Ronald Reagan was in the White House. The pharmacy chain reported better than expected profit and sales. However, the big news was its plan to close 1,200 stores in the next 3 years. That spurred hopes of a turnaround in a stock that's lost more than 4/5 of its value in the last decade. Tool maker Snap-on, Blackstone, and insurance giant Travelers also jumped to new record highs on strong quarterly results. Speaking of new highs, TradeStation data shows almost 1/3 of the S&P 500's members hitting new 52-week highs last week. Overall, utilities and real estate investment trusts were the best performing sectors last week. Energy and healthcare were the only two with negative returns. Technology lagged but eked out a gain of less than 0.1%. Aside from chip equipment firms, health insurers like Centene also fell. The group continues to struggle as increased use of medical services pushes up their costs. However, companies associated with providing the services advanced. That list includes Intuitive Surgical, HCA Healthcare, and Boston Scientific. Given the weakness in chip makers, technology and the broader NASDAQ 100 remain below their highs from July. The S&P 500 and Dow Jones Industrial Average, on the other hand, made new record highs last week. Strategists made some bullish calls as well. For example, Jonathan Golub and Patrick Palfrey of UBS raised their 2025 price target on the S&P 500 from 6,000 to 6,400. Ryan Dietrich at Carson Group was similarly optimistic. saying that bull markets tend to last if they survive for 2 full years, which has now happened in his view, because he places the start of the current run in October 2022. And now let's chart the market. While stocks have steadily advanced, there seem to be few signals that might be considered bearish. The S&P 500 hit a new record last Monday and pulled back on Tuesday. It then bounced at its high from the previous week, which is potentially consistent with an uptrend. The advanced decline line also hit a new record. Some traders may view that as confirming the index's gains. The Moving Average Convergence Divergence Oscillator, or MACD, is additionally rising. That's a potential sign of bullish momentum. Pessimists might also struggle to describe the S&P 500 as overly euphoric. For example, Wilder's Relative Strength Index is still below overbought levels. The last price was also about 1% above the 10-day moving average, compared with roughly 4% in mid-August. Sentiment measures, like polls from the American Association of Individual Investors and the National Association of Active Investment Managers, are also below recent highs. Is there still cash on the sidelines? Finally, intermarket conditions may be viewed favorably. CBO's Volatility Index, or VIX, ended last week around 18, well above its 12 area in June and July. The 10-year Treasury yield has also paused after an early October surge. Declines in either could potentially support risk appetite. We'll now turn to the events this coming week. No major items are scheduled for today. Coming sessions are light on economic news, but heavy on earnings, with more than 1/5 of the S&P 500 issuing results. Several Fed officials are scheduled to speak on various days. However, Chairman Jerome Powell is not one of them. Some of the big stocks reporting tomorrow include General Motors, Lockheed Martin, Verizon Communications, Texas Instruments, and RTX, formerly known as Raytheon. Wednesday brings crude oil inventories and existing home sales. Boeing, Coca-Cola, and AT&T announce in the pre-market. Tesla, International Business Machines, and Lam Research are due after the closing bell. Thursday features initial jobless claims. Companies including Honeywell, United Parcel Service, and Western Digital are some of the big companies scheduled to report. Durable goods orders are on Friday, along with results from Colgate, Palmolive, and Centene. Thanks for watching. Please visit TradeStation.com for more.